Ladies and gentlemen, good day and welcome to the Q2 and H1 FY24 earnings conference call of Rupa and Company Limited, hosted by Orient Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Sumit Khaitan from Orient Capital. Thank you, and over to you, Mr. Khaitan.
Thank you, Arshia. Good afternoon, everyone. Thanks for joining us on the call today. We are joined by the management of Rupa and Company Limited, represented by Mr. Vikas Agarwal, Whole-time Director, and Mr. Sumit Kovala, Chief Financial Officer. Before we begin, I just like to give a small disclaimer that this conference call may contain certain forward-looking statements which are based on belief and opinion as on date of this call. These statements are not the guarantees of the future performance and involve risks which are unforeseen and difficult to predict. A detailed disclaimer has been added to the reference presentation which was uploaded on the exchange. I hope everyone had a chance to go through it. With this, I would now like to hand over the call to the management for their opening remarks. Over to you, sir.
Good afternoon, ladies and gentlemen. I'm Vikas Agarwal here. On behalf of Rupa and Company Limited, I would like to extend a very warm welcome to all of you who have joined us for this results Concall. We appreciate your time and interest in our company's performance, and I hope that everyone had an opportunity to go through the financial results and investor presentation which has been uploaded on Stock Exchange. Our revenues in Q2 stood at rupees 302 crores, representing a growth of 6% on year-on-year basis. Our sales volume experienced a robust double-digit growth this quarter, a 15% growth in Q2, and a 10% growth for the first half of financial year 24. The segment-wise growth in year-on-year terms, quantity-wise, premium 22%, mid-premium 20%, economy 9%. Geography-wise, Hindi Heartland showed an impressive quantitative growth of 27% in H1. Modern trade contributed rupees 28 crores to our revenue in H1 financial year 24. Revenue contribution from modern trade stood at 5% in first half year. Owing to multiple factors leading to disturbance in global markets, demand for exports faced a distinct challenge. However, in a significant development, we inaugurated a dedicated export unit during this quarter, enhancing our manufacturing capabilities and expanding our revenue potential. We have also made addition to our senior management team, and we are happy to announce the appointment of Group Chief Digital and IT Officer, which allows us to capture a great opportunity in digital and online space. Going forward, as per our earlier guidelines of 18 to 20% CAGR growth year-on-year basis, we are working on same. Quantity-wise, of course, we are achieving the same. We will be doing better. In terms of value, a lot will depend upon the raw material prices. As per our potential financial practices, we will continue to holistically focus on our margins while achieving the aforesaid targets. And we envisage an EBITDA margin of 11 to 12% on annual basis for the current year. We are focused and navigating the market with determination to place ourselves in an advantageous position to exploit the rise in demand in coming quarters. Yarn spreads have currently stabilized but may soften further. We are closely monitoring the challenging business dynamics and are taking active steps based on prevailing and yet future expectations. We are committed to enhancing our product mix, and our strategy is built on optimizing processes, controlling expenses, and capturing growth opportunities to strengthen shareholder value. We look forward to our continued support as we navigate the road ahead together. With that, I would now conclude my speech and wish you all a very happy and prosperous Diwali, and would like to hand over the floor to our CFO, Mr. Sumit Khawala, about financial performance of our company. Over to you, Sumit.
Thank you, Vikas sir. Hello everyone, and thank you for joining us for our Q2 and H1 FY24 earnings call. I will provide a brief overview of our financial performance for the quarter as well as first half of the FY24. On quarterly performance, revenue from operations for Q2 FY24 stood at INR 302 crores, grew by 6% year-on-year. The EBITDA for the quarter stood at 32 crores as compared to 29 crores same period last year, registering a growth of 11% year-on-year. Operating EBITDA margin for the quarter stood at 10.7% for the quarter, up by 50 basis points year-on-year. The net profit for the quarter stood at 21 crores against 17 crores in Q2 FY23, which grew by 22% year-on-year. PAT margin for the quarter stood at 6.8%, up by 90 basis points year-on-year. Now coming to the half-yearly performance, our revenue from operations for H1 FY24 stood at 498 crores against 500 crores in H1 FY23, down by 0.4% year-on-year. EBITDA stood at 44 crores, degrew by 8% year-on-year, and EBITDA margins for H1 FY24 stood at 8.8%, down by 70 basis points year-on-year. PAT for H1 FY24 stood at 25 crores as against 29 crores same period last year, degrew by 15% year-on-year. PAT margin stood at 5%, down by 90 basis points year-on-year. Cash generated from operations stands at 91 crore positive, which has been majorly utilized in reducing the debt. Our net debt stands on September 23 is rupees 62 crore versus 134 crore in March 23. In addition, our diligent approach to the working capital management has led to decrease from INR 788 crore in March 23 to 743 crore in September 23, indicating our commitment to efficient resource management. Now I open question answer session for our esteemed investors.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ms. Sonali Shah from SK Advisor. Please go ahead, ma'am.
Good afternoon, sir. I have few questions. So what going ahead, what are our expansion plans for the EBO stores?
EBO stores, we are targeting another 10 stores for the current year, but a lot will depend upon the current sentiment of the market and all. So we are holding any further immediate, but coming quarter we'll probably look for another 5-7 stores.
Okay, sir. And sir, could you just throw some light on the sales split in the rural areas and the urban areas, as well as the trends in the sales for both these areas?
Rural India contributes approximately 55% of the total sales, and urban India contributes 45% of the sales.
Okay, sir. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Mr. Varun Mishra, an individual investor. Please go ahead, sir.
Hello. Yeah, hi. Am I audible?
Yeah, quite audible. Go ahead.
Yeah, hi, sir. Actually, I had a couple of questions. Firstly, I wanted to know, are we planning to do any capex guidance for FY24 or 25?
Yeah, capex what we do year-on-year basis to support the business is around 25 to 30 crores.
Okay.
So that will continue.
Okay, so can we expect any growth is expected in this number?
Yeah, as we said, export unit also we have inaugurated this year. So currently export are little soft, but in coming quarters we are quite hopeful that should do well.
Oh, okay, fine. Yeah. So my next question was how is the demand shaping up for thermalware segment, Like, what has been the current order book for this quarter two?
Like quarter two, it was quite good, but quarter three, as we are seeing the season, a lot will depend upon the season. Quarter two has been good, so quarter three we are hopeful. So next 10-15 days are quite crucial. So a lot will depend on the weather.
Okay. My last question is, like, our exports have been muted for this quarter. Like, when can we expect this to normalize?
Normalize, we are not sure. We are expecting it should do well in coming, not in quarter three, but from quarter four onwards. Once the global economy revives, Europe and all, that should pick up from quarter four. That is our understanding. But in immediate term, we see yarn prices going soft because this is dullness in export.
Oh, okay, fine, sir. My questions are answered. Thank you, and happy Diwali in advance, sir.
To you too. Thank you.
Thank you. The next question is from the line of Mr. Pritesh Jain from PJ Investments. Please go ahead, sir.
Am I audible?
Yes, sir.
Yeah. So congratulations on the good set of numbers. So my first question is, what will be our branding and advertising cost for the H2 and going ahead?
Year on year, this is 7%, so we stick to 7%.
Okay. Can you shed some light on the performance of our subsidiaries, Rupa Bangladesh, Rupa Fashion, Euro Fashion, Oban, and so on?
Currently, we have 5 subsidiaries: Oban Fashion, Emogi, Euro, Rupa Fashions, and Bangladesh. Out of 3, Oban, Emogi, and Euro both are EBITDA and PAT positive, but Rupa Fashion and Rupa Bangladesh has negligible losses.
Okay. So the follow-up on that is, which of them are PAT positive?
Oban, Emogi, and Euro are PAT positive.
Okay.
Mr. Pritesh, are you done with your questions?
Yes. Thank you. And happy Diwali in advance.
Happy Diwali. Thank you.
The next question is from the line of Ms. Anushka Chitnis from Arihant Capital Markets Limited. Please go ahead, ma'am.
Thank you so much for giving me the opportunity, and congratulations on a good set of numbers. I have one question in that, considering the reduction in net debt and working capital has also been reduced, what's your ideal leverage that's being targeted for FY24?
We have target to reduce our working capital days to around 220, 225 days.
Okay.
From March to 70 days.
Okay. Got it. Thank you so much, sir. That's all from my side.
Thank you, ma'am.
Thank you, ma'am. The next question is from the line of Ms. Forum from Abacus. Please go ahead.
Hello. Yeah, hi, sir. Happy Diwali.
Happy Diwali.
Few questions from my end. Like, have you taken any price hikes in the month of October?
Price hike we have taken initially in October, ma'am, but as per competition, we have withdrawn that towards the end of the month. So the price hike was taken, but it didn't stick in the market. We have to withdraw it. So current year, we have not taken any price hike.
Okay.
But that's due. I think in coming quarters, we have to take one.
Got it, sir. And
A lot will depend upon the yarn price. So let's see what happens next month.
Got it. And so for full year, what would be our revenue guidance?
Revenue guidance, ma'am, as earlier committed, 18 to 20% is our target. So quantity-wise, of course, we will do better. Volume-wise, value-wise, a lot will depend upon the yarn prices. We might do better and vice versa. Then raw material price will play a major role.
Okay. And so, like, for first half, if you could quantify how much we have generated from contract manufacturing. We have been doing contract manufacturing for Reliance and private labels for Amazon, etc. So just want to understand how much revenue has been generated from there.
For the first half, we have generated the revenue from contract manufacturing is around 4.5 crores.
4.5 crores.
The 4.5 crores, but with the setting up of a new unit, the coming quarters should do quite well.
Okay. And so what is the capacity of the export unit, and how much incremental revenue can be generated from this unit?
So around 40 to 50,000 pieces per day, which would help us to increase the revenue of around 100 crore plus with the full with the 80 to 90% capacity.
And so current capacity would be how much? Capacity utilization?
We have just commissioned the unit, ma'am, so it will start now.
Okay. And so have we hired any expert to look after the product mix of the EBOs?
For the export? For the EBO, yes, we recently hired a EBO manager.
All right, sir.
Just focusing on EBO, we had a modern trade head, but somebody to focus on the EBO, we hired somebody last month.
Okay, got it. And so can you quantify, like in quarter 2, thermal wear sales, how much would that be?
Quarter 2 and quarter 1. Quarter 2. Quarter 2 sale is around 30 crores and it contributes around 7% of the total revenue.
30 crores. Okay, sir. And like we were holding thermal inventory worth 70 crores as on March. So
yeah.
I think part of that has been exhausted now.
Yeah.
Got it, sir. Thank you. So I'll get back in the queue.
Thank you.
Thank you.
Thank you. The next question is from the line of Ms. Prerna Jhunjhunwala from Elara Capital. Please go ahead, ma'am.
Thank you for the opportunity. Sir, I would like to understand the demand trends that are shaping in the mass segment as well as in the premium segment. How it has been in the quarter and how it has been for the October month.
Segment-wise, and as quantity-wise I have mentioned, like in economy we did a growth of 9% in quarter 2. In mid-premium we did a growth of 20%, and premium we did a growth of 22%. And half-yearly wise, economy we did 11%, mid-premium 12%, and premium is little flat.
Sir, I was just asking on qualitative basis, how is the feeler in the market on demand perspective, not the quantitative wise. Whether you think this 22% is a good number, bad number, or it could have been better, given that there has been demand constraint in the past 1-2 quarters.
I wouldn't say it can't better, it would have been better, but because of the just yarn prices became futures, it looks little soft in coming quarters. So the demand is not as it should have been. We could have done better. So definitely in coming quarters, things should be better.
So this is valid across mass as well as mid-premium and premium categories. You're not seeing any green shoots anywhere?
No. Across all categories, a lot will depend upon the...
And how has been the Pujo sales as per your understanding, the festival season?
Sales has been decent, ma'am.
Okay. And how's the traction on the sportswear athleisure category for macro and macro women segment?
It has done decent. We won't say that it has done great, but it has been decent.
Okay. And sir, you think the 18 to 20% growth guidance that you have given, is it achievable given 15% growth in Q2, or we'll still have to try harder to achieve 18 to 20%?
No, that's, as I mentioned, ma'am, value-wise a lot will depend upon the yarn prices, but volume-wise, of course, we'll do better. And a lot will depend upon the raw material prices. If raw material prices comes up, then value-wise also we should do better. But quantity-wise, yes, it's quite achievable.
Okay. And sir, what are your plans to increase your distribution network in terms of distributors and MBO outlets?
That's regular process, ma'am, and we have started a retail tie-up program, a loyalty program, which is happening, and we are gradually trying to expand it to other cities and other towns. So that is happening. So we are trying with that 3 cities. It has some initial starting hiccups. We are working on that. Once same is sorted, we'll expand it pan-India gradually.
Okay. Okay. Understood, sir. Thank you so much.
Thank you.
And happy Diwali.
Happy Diwali to you too.
Thank you. The next question is from the line of Mr. Rehan from Equity Capital. Please go ahead.
Hi, am I audible?
Yes.
Yes, sir.
First of all, congrats on a great set of numbers. I had a couple of questions. First would be that which product do you see generating the most significant volume growth for you all, or which segment do you all see the same? If you could share some light on that.
Like we see a possibility across all the segments, whether it is economy, mid-premium or premium. Economy, and we recently endorsed with Ranbir Kapoor. So India as a country, there is a huge potential economy. Although our base is big in economy, but we still see a big opportunity there. Mid-premium, we don't have such huge numbers, so definitely premium equal opportunity is there to grow 20% at least. So we see a possibility across all the categories, across all the segments. As a part of overall economy, we are still very small in numbers, so that opportunity-wise, we don't see a challenge anywhere.
Okay. If you could, can you share a split on like the segments that you have, which is economy, mid-premium, etc., premium? Can you share the split of revenue on that if you have the data with you?
The split of revenue, economy segment contributes around 32%, mid-premium contributes around 58%, premium segment contributes around 10%.
Okay. And we used to do earlier about 15-18% EBITDA margins. Do you see in the coming years that we would revive those levels again?
We would love to see that. Coming years, all depends. A lot will depend upon the yarn prices. So once yarn prices are little firm and the trade has more confidence about the stability and about the going of the yarn prices, yes. So currently we are taking a hit because of our earlier inventory also. But as you see in current quarter, our margins has been 11% and 10.5%. And on yearly basis, in next 2 quarters it will do well. So year average should be around 11 to 12%. And in coming years, it should definitely do well.
Okay. Well, if I can squeeze in one last question. The women part of your segment would, like your revenue segment would be about 11-12%, right? Do you see any significant growth in that part coming forward?
Yes, women segment has a great opportunity in times to come. Currently, we are contributing, our total revenue constitutes around 11%. In future, we are hopeful that it contributes around 20% in next 2-3 years down the line.
Okay. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Mr. Ketan Athavale from Robo Capital. Please go ahead.
Thank you for the opportunity, sir. I wanted to know about the incremental margin that we have had recently. So can you throw a bit light on that? And can you please provide guidance for FY25 and 26 margin guidance?
Since current year margin guidance is around 11 to 12%, definitely will improve going forward for 25-26, every year around 1-1.5%.
Okay, and what will be the major reasons for margin improvement which we have recently seen and which we will experience going ahead?
It would be contribution to gross margins, as well as will control the ad spend and other operational overheads, which would lead to improve the margins in coming years.
Okay, got it. Thank you.
Thank you. The next question is from the line of Mr. Rahul Jain from Credence Wealth. Please go ahead, sir.
Thanks for the opportunity. Congratulations on a good set of numbers, sir.
Yeah.
First of all, our gross margins have fallen in this quarter.
Your voice is breaking, sir.
Can you hear me? Is this more clear?
Yeah, better.
So, sir, our gross margins have fallen in this current quarter.
Yeah, it is because of the change of mix, economic.
Hello? Can you hear me?
Yes.
Hello. So our gross margins have fallen in the current quarter by almost 5-6%, and our EBITDA margin has moved up again to double-digit margins after 3 quarters. Is it fair to assume, first of all, this EBITDA margin growth has been primarily led due to advertisement expenses falling back to 6-7%?
Yes.
So how do we see the gross margin movement going ahead?
Means the reason for declining gross margin is basically the change of mix. In terms of volume, the economic segment contributes around 45% to this quarter. So going forward, it will be rationalized, and the contribution from premium and mid-premium segment will increase, and gross margins will improve thereon.
Sure. And sir, you mentioned the demand is soft, and also the price hike which you took in October first week due to the soft demand that has been reversed now. So how do we, and at the same time, you are projecting around 18-20% revenue growth for FY24, which would mean that in the second half, you need to grow by almost 30-35% over the previous year second half. So what gives you confidence that we can deliver that kind of 18-20% revenue growth?
So as mentioned, and in earlier talks also, quantity-wise it's quite achievable. A lot will depend upon the yarn prices. If yarn prices firms up, that's quite achievable. But if yarn prices become soft, and the reason to withdraw that price hike was expectation of soft yarn prices, so a lot will depend upon the yarn price.
So basically, sir, that means if the yarn prices continue to remain at the current level,
yeah.
So then in spite of the volume growth, since the prices are down by around 8-10%, we may not be able to deliver that kind of growth.
You mean to say 18-20% growth with the current yarn prices?
Yeah, sales value growth.
So that's achievable.
You are saying at current yarn prices, sales value growth of 18% is achievable.
Yeah.
Fair enough. And sir, with regards to the longer term question,
we have invested a lot in the brand and all. We have invested a lot in the economy brand. We never used to have a brand ambassador. So a brand ambassador is there that should give us a big support. And for other brands also, we are investing heavily on marketing. And top of that, we have set up a new export unit, which would help us in contract manufacturing also. So coming quarters, we are quite hopeful, and we are on the job.
But sir, the exports is still a very small figure compared to our overall top line.
But contract manufacturing, you can scale up once you have that unit with you. That scaling up is easier then.
Sure. And sir, slightly longer term question in terms of your presentation, where you have mentioned the X factor areas will go up almost 3x in 4 years. So we are talking about taking that business from around 180, 200 crores to 600 crores plus. So, and overall, you have given a guidance that in 3 years you will be reaching 2,000 crores. So what are the step 1, step 2, step 3, 3-4 strategies which have been put in place? And if you could spell those strategies more in quantitative terms to achieve this kind of number going ahead.
It will be difficult to share it on the phone number on the Concall, but if we have a detailed presentation, we can share it in more further detail. But step 1, step 2, step 3, the logic is same. We have to increase the distribution network. As mentioned earlier also, we have to do a retail tie-up. So we have launched a retail tie-up scheme also. So we have taken various efforts, various strategies are there. How fast and how quick we implement that all depends upon that. So we are working on same.
Sure. So last question on the pricing front. Pricing has been an issue for almost 3-4
Tell about the 3 years in step 1, step 2, step 3 is little difficult, sir.
Sure, got it, sir. And sir, with regards to the pricing pressures which the industry has been going for almost 3-4 quarters now, so And earlier it was, of course, 1 year back, it was more due to the cotton prices, and then yarn prices are not going up. But is it like this competitive pressure in the industry overall has changed in last 1 or 2 years, whereby it is difficult for organized players like us, or I should say the branded players like us, apart from the other 3 or 4 large brands, we are finding it difficult to push a pricing growth?
I think after a huge yarn price hike and everything in during COVID times, where our company has done outstanding, so a lot of what I think balancing factor is still happening, because that athleisure demand was quite high that time, yarn prices were quite high, so everything is softened at that time. That balancing is happening. So probably by this quarter of this year, that balancing thing should be happening and it should phase out. And from next year onwards, things should be stable. Trade also is stable. They are aware about yarn prices won't fall. We have seen a yarn prices fall of 30%, which is historically we have never seen. So such things have never happened before historically. Neither trade has seen that, neither we have seen, industry has seen that. But I think the worst has happened and things should be stable. Once things are stable, we look forward to a normal growth and a normal operations again.
Sure, sir. Thank you so much, and wish you all the best, and wish you all a very happy Diwali.
Thank you. Thank you.
Thank you. The next question is from the line of Mr. Ankur Kumar from Alpha Capital. Ladies and gentlemen, this would be the last question of the session. Please go ahead, sir, with the question.
Hello, sir. Thank you for taking my question and congrats for a good set of numbers. So my question, sir, is on the EBITDA margin. So first half we are like close to 9%, second quarter is 10.7%, and we are saying that 11 to 12% for the full year. So to reach 11 to 12% for full year, I think we need second half to be like 13-14% type EBITDA. So are you confident on achieving that kind of number?
Yeah, we are quite hopeful, sir, with that.
And sir, what would be the reason? Is it like thermal will have higher margins, or is it like cotton prices have come down, so we expect margin improvement, sir?
A lot will happen because of the stock cost averaging out, and premiumization is also one factor. Thermal should do well compared to last year. Athleisure should do well. The outerwear we are focusing on, and a few new ranges we have launched in last year where margins are better. So those things together should help us to achieve those kind of numbers.
Got it, sir. That's it from my side, sir. Thank you and all the best.
Thank you so much.
Thank you. I would now like to hand the conference over to Mr. Sumit Khaitan for closing comments.
Thank you everyone for connecting on the call today. I would also like to thank the management for sparing the time and answering all the queries today. We are Orient Capital, Investor Relation Advisor to Rupa and Company Limited. For any queries, please feel free to reach out to us. Thank you everyone and have a nice day.
Thank you everybody and wishing you all a very happy and prosperous Diwali again.
Thank you, sir. On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines.